After the financial statements, we will now go ahead and talk about financial analysis. In financial analysis, you will make use of your financial statement data, and then you will convert this data into new information that is used for decision making purposes, because we are not ending with just the financial statements. We can actually go further. And same with the financial statements, this new information can also be used by stakeholders such as banks, creditors, employees, management, government, and other parties. And the very essence of this new information is that it allows you to be able to compare yourself with your previous records or other companies by making use of percentages. Because if you will just be using the values, it may not be credible because of the difference of your company size with the other companies. So we make use of percentages. You can do comparison intra-company, comparison, intercompany comparison, and you can also compare with industry averages. And this new information is actually computational in nature, so you will compute for it. But for me, more important than the computation is you being able to interpret it. So again, just to recap, it does not end with your financial statements. You can actually go further. You can do financial analysis to come up with new data that will be used by stakeholders for their decision making. And the very essence of financial analysis is for you to be able to compare. Okay, you can compare it with your records, you can compare it with other companies, and you can also compare it with industry averages. Okay? So for financial analysis, we have approaches. We have two. One, we have the traditional, and then we have the contemporary. So for the traditional, we have three. Number one, we have the horizontal analysis. And then we have vertical analysis. And then we have trend. Okay. So what's with horizontal? So I'll first talk about horizontal. In this approach, you need 2 years of information. Okay? You should have 2 year information for this one. For the steps, I'll give you two. Number one, you need to get the peso change of your data, and then right after that, do the percentage change of your data. So that's how you do horizontal analysis. To illustrate, let's say you have your income statement here, you have your net sales. This is just partial. I will not write everything. So net sales minus cost of sales equals gross profit. It says here that you need 2 year information. So let's say you have information for 2020 and 2019. So for the amount, let me just write something here. 80, ito 50, 40. Okay. So, yan. So let's say this is our data. This is our 2 year data. The first thing that we will do is get the peso change. And since this is called horizontal approach, you will do this one horizontally. If you don't know horizontal, if you cannot compare, if you are having hard time comparing horizontal and vertical, you have to remember that only the word horizontal has this kind of line. So horizontal is like this, vertical is like this. And since we are doing horizontal, we will do it this way. So meaning this is your approach on doing horizontal analysis. So for the peso change and percentage change, you will write it here. Peso change and then percentage change, because you will be writing here and here. You're approaching it horizontally. Okay? So when you are doing horizontal analysis, the previous year is also called the base year. Okay, so you have to remember this. The previous year is also called the base year. And to compute the peso change, you will be using the value from the current year as your minuend. Meaning, you will start from that one. So in this case, if I'm getting the peso change of net sales, my minuend is 100. Okay? Minus your base year. Okay? So to compute, it's 100 minus 80, I get 20. And then for cost of sales, 50 minus 40, of course it's 10. And then the answer is 10. This is always that whenever you are computing the peso change, the minuend, this is math. The minuend is always the current year. So current year minus base year. Base year is the previous year. So that's how you compute the peso change. But this is not really what you need when you are doing horizontal analysis. Because if you just have the amount change, the peso change, it will not allow you to compare actually. Because your company is most likely different in size as compared to other companies. So to be able to compare it, you may want to compute the percentages. Now, how do we compute the percentage change? Let me just write the formula. For peso change, it's current year minus base year or previous year. For this one, you will be using current year minus base year, aka or peso change, as your numerator, and then your denominator is base year. That's how you compute the percentage change. And actually, I have a mnemonic for this one. So my mnemonic for this one is, so that I don't forget it, is noo. But what does it mean? No? What's with noo? Noo is new minus old, all over old. You can stick with this formula, but if noo works for you, you can use noo, no? So that you don't get lost, no? What's my denominator? What's my minuend in my numerator, okay? So with noo, you're safe. New minus old, all over old. So in this case, new minus old is 20 divided by old, 80. So this is 20 over 80, right? And this is 25%. Then for the next, cost of sales, change is 10, base is 40, also 25%. And for the last, peso change is 10, base year is 40, also 25%. So this is how you do horizontal analysis. Okay, next we have the vertical analysis. If you are doing vertical analysis, you will refer to your financial statements. If you are doing income statement, you will be following these steps. Step 1, you will set your net sales at 100%. And then right after that, you cross multiply. Sir, what do you mean by cross multiply? I will elaborate later. And then, if you are doing balance sheet. For balance sheet, your first step is to set your total assets at 100% and then you cross multiply. For example, let's say you have your income statement here and then you have your balance sheet here. Net sales minus cost of sales to get your gross profit, and then you have other income to get your total income, and then I will lump all the expenses to get your net profit or net income. Then let's say this 100 to 50, 40, so I get 90 minus 30, I get 60. That's it. For the balance sheet, let's say I will just write them down in classification. Current asset, non-current asset to get your total asset. Then current liability, non-current liability, total equity, total liability and equity. Then for the amount, let's say this is 50, 50, and then 100. Then 30, 20 to get 50 plus 50, 100. Okay, so balance. Now, how do we do vertical analysis? Unlike the first one, where you need 2-year information, you can actually do vertical analysis with just 1-year information like this one. So if you are dealing with income statement, you set your net sales at 100% and the rest is just cross multiply. Okay, for example, cost of sales. How do I get the percentage for cost of sales? So 50 times 100% divided by 100. So answer is 50%. And this is easy because I'm giving a simple example, no? So I will just complete this one. So this is 50%, this is 40% to get 90% minus 30%, 60%. Okay? What if it's like this? So let's say this is 75, this is 21, making this 54. So again, if you are doing income statement, vertical analysis, net sales at 100%. Now, how do you compute the percentage here? This one and this one. For this one, cross multiply 21 times 100% divided by 75. And then for 54, to compute the percentage, 54 times 100% divided by 75. So it's just cross multiply. So let me just compute. This is 28%. And the next one, although you can compute it directly, 72%. Okay? So that's how you do it, no? Now, how about for balance sheet? So it says here that you set your total assets at 100%. Following the accounting equation, your total liabilities and equity is also 100%. And the rest is just cross multiply. So this is 50%, 50%, 30, 20, 50%, 50%, 100%. What if you are given like this? So I will just write it in partial. Say this is 65. Then this is 15. So this is 80. Now how do we do that? Again, your total asset is 100%. Now how do you compute this one and this one? Again, just cross multiply. So to compute this one, the first one, yung current assets, 65 times 100% divided by 80. Then for the next one, 15 times 100% divided by 80. Okay? So that's how you do it. So let me just compute. This is 81% and the next is 19%, I guess. Let me just compute it na rin. Okay, 19%. Okay? So that's how you do vertical analysis. So again, to do vertical analysis, you only need 1-year information, although you can do it with multiple years. So that's the second one, vertical analysis. And finally, we have what we call the trend analysis. Although this one is applicable if you have 2-year information, this is preferable if you have at least 3-year info. But this doesn't mean that you cannot do it with just 2. So for the steps, the first thing that you will do here is to set your base year at 100%. Okay? So again, when we say base year, this is the oldest year that you have. Like if you have 2017 to 2020, 2017 is your base year. And then the second step here is to get the quotient of your succeeding years and base year. So this is how you do it. First step, your base year, set it at 100%. And then for the second, you will just be applying this formula. So to illustrate, so I will just get a partial statement, income statement. Okay, 2020, 2019, and 2018. So that's 3. Okay, so let me just assume some figures here. Yan na lang. Then, okay. This is 40. Ito 35, 30. You can see that this one is a combination of your horizontal and vertical, but not directly. It says here that your base year should be at 100%. This is your base year, right? So everything there is 100%. That's the first step. Then for the second step, you will just be getting the quotient, succeeding year over base year. For example, if you want to get the percentage here, but you will complete this table, okay? If you want to get the percentage here, you will get your succeeding year. That's 2020, so that's 100. And then divided by your base year. Base year is 80. So answer here is 1.25 or 125%. So this is 125%. How about this one? Okay, so apply the formula. Succeeding year over base year. In your succeeding year, this is 55. But in your base year, this is 50. So answer is 1.10 or 110%. Okay, so you will just complete this one. So I'll fast forward. And that's how you do trend analysis. Of course, you can also do this with your balance sheet, your other statements. You can do this one. But yeah, this is the idea for trend analysis. You need at least 3-year information, although you can also do this one with just 2-year information. And that's it. In the next upload, I will be discussing financial ratios, which is actually your contemporary approaches. It will just be formulas, but I will be giving some tips, no? Because if it is just formula, I can just give the formula list. Okay, so see you in the next.